attention to the financial statements. So the first financial statement that we have is the statement of comprehensive income, or the income statement. The new word for income statement internationally is statement of comprehensive income. Okay, the first statements that we're going to do is for a service undertaking. So what's very important is that you will put all the income and expenses from the first day of the financial year up to the end of the financial year. You will add all your income and expenses, and that's why this heading is for the year ended, because it includes all the income and expenses from the 1st of July 2020 to 30 June 2021. Okay, then first of all, I will write all my income. So there can be more than current income. Remember, a different word for current income is services rendered. And then I will look at all my expenses. So you can see that I've got a block here. All my expenses are written in that block, and then I add them together and I show that the total in this block is 66,600. Now what's very important is that that 66,600 must be in brackets, so that you can deduct it from the 70 to determine what is your profit for the year. If you don't show the 66,600 in brackets, you will not get a mark for it, because what we are testing is that you have to deduct it from the income to get your net profit for the year. Okay, after I've done the statement of comprehensive income, I will have to decide if I am satisfied with a profit of 3,400. If I'm not satisfied, I have to look at the income, determine how can I improve the income, can I render more services to increase this income, and I will have to look at the expenses and see which of these expenses are high, and when I look at it, the salaries in comparison with the money that we earned and the material cost is quite high. So this is a hairdresser. Now you will have to make a decision. Is there a way that I can reduce this material cost? So there's perhaps a lot of wastage. So we must work with that material cost in such a way that we don't waste anything that increase the expense. For the salaries, we will have to decide, will we work longer hours so that we can do more people's hair in a week so that we can increase the income to pay out this expense, or will some of the people have to leave so that we can reduce the expense? So you use the figures in the income statement to see how you can improve income and how you can reduce expenses. The second one is the statement of financial position, the balance sheet. Okay, now that balance sheet, we take the assets, liabilities, and equity balances on the last day of the year, so on 30 June. And that's why we say on 30 June. So it's the balances on the last day of the year. Okay, now assets equals owner's equity plus liabilities. So it means the top part of the balance sheet is my assets, the left-hand side, and the bottom part of my balance sheet is owner's equity and liabilities, the right-hand side of the accounting equation. Now, if we look at the accounting equation, it says to us immediately that this total of my assets must equal the total of equity and liabilities. Okay, so I'm going to split my assets between non-current assets and current assets. Non-current assets is assets that we buy that we're going to use for a long period. So we don't buy land and buildings, vehicles, machinery, and we sell it tomorrow again. We buy it because we want to use it in the business for a long period. So fixed assets will be treated as non-current assets. If you have a fixed deposit and it will be in the bank for more than a year in the future, you will show it as a non-current asset. Current assets are the things that change on a daily or weekly basis, so it's not long. So this is within 12 months that it will change. The non-current assets is longer than 12 months. So it doesn't change on a short-term basis. Now, the trade and other receivables is the debtors that we sell goods to on credit. Cash and cash equivalents is the money that I have in the bank. So that's my bank account where I pay in money and I use that money to pay expenses and liabilities. It is petty cash. That is, for instance, 1,000 rand that we put in the small tin, and we pay small amounts out of it so that we don't have to do it with an EFT every day, and it will be cash float. Okay, cash float is the change that we keep in the till to give change to people when they pay us. Okay, so all these current assets will change regularly within 12 months. Then I go and I take the block and I add all my non-current assets together and I get the total at the top. I will take all the figures in this block, add it together, and I will get my current assets. And then I add those two together to get my total assets. Equity and liabilities. Equity means the interest that the owner has in the business. So how much money does he have in the business, or how much money does the business owe him? This consists of capital, and profit will be added. So this profit that we made there, the 3,400, will be taken to the capital account because the owner is entitled to get it. And if the owner took money or anything else out of the business, you will subtract the drawings. Then the non-current liabilities is a mortgage loan or a normal loan. Mortgage loan is where I give my property as security, and it will take 20 to 30 years to pay. So it's a long-term thing. A loan, normal loan, is where I, for instance, buy machinery or a vehicle and I get about 60 months to pay it. So it's also, I pay it back over a longer period. Then I add them together and I show my total. Current liabilities is the amounts that we owe to our creditors that we will pay on a regular basis. Now there's one catch here that you must take into account. If they tell you there's a bank overdraft, that means you made arrangements with the bank that we can take more money out of the bank than what we put into the bank, and that is my bank overdraft. So it means that I owe money to the bank, so it's a liability to me. So instead of putting the bank in cash and cash equivalents, that is a favorable balance when I've got money in the bank, I will show the bank overdraft and the current liabilities because we have to pay this back to the business. And then if I take the total of owner's equity, non-current liabilities, and current liabilities, and I add it together, this total must give me the same total as the assets. If they don't, it means that I made a mistake somewhere and I will have to go and look for my mistake. Okay, now what we have with a statement of financial position is the notes. So we want to show fixed assets, and that can consist of several different assets, and we want to show the cash and cash equivalents that also consists of various things. So we will complete a note for it. So for fixed assets, we will go and look at the fixed assets that we have, and we will put in the amount, and then this answer that I get here of all those fixed assets together is the amount that I will go and show in my balance sheet as fixed assets. So this is my note number 1. Then for cash and cash equivalents, I will take all the cash and cash equivalents, so it will be bank, petty cash, and it can also be cash float. And the amount that I add up there, the 6,700, is the amount that I will show on my statement, and that will be my note number 2. And then for owner's equity, we will also have a note, so we will go and look at the capital balance according to the capital account. We will add the net profit that we calculated in the income statement, subtotal, add those two together, withdrawings we will deduct, and then we get an answer. So this one that we calculate here will go under owner's equity, and that will then be my third note. So the notes are there to indicate to people who look at the financial statements, how did we get to this 31,700? So remember, there's a lot of people who are interested in the financial statement. The employees, the owner, the bank, SARS. So everybody wants to know, how did you get to these figures? And that's why you do these notes, so that you can indicate the figures that I've put on my statement of financial position. How did I get to those figures? Okay, so remember, the financial statements is very important. We will look at our financial statements to make decisions for the future, so that we can have a better income and better profit, and that our assets will increase, and we will always try and reduce our liabilities.